Alright, what I'm gonna tell you today is gonna be insane. You can double your money with your investments. Let's see how you can do it. And looking at the stock market right now, you can see that things are actually doing pretty good. First thing first, let's take a look at the stock market because yes, my video is still about investing, not just printing more money. That would be way easier, of course. Just tell me where the machine is and I'm gonna just do it. So since the beginning of the year, the stock market actually performed really good. The S&P 500 gained around 20%, which is incredible because the historical records are around 12-15% give or take every single year on average, right? Right now we're at 20% mark. And a lot of stocks, a lot of indexes actually also are a little overvalued. That's what the Warren Buffett indicator tells us, that's what the news tells us, and that's what we think also what's happening. And most of the drive for the stock market actually comes from the tech stocks. Yes, that's been like this for the last 20 years and it's still happening today. And since the beginning of the year until September 21, the stocks on TSX, on NASDAQ, New York Stock Exchange actually performed really good. We only had a couple of corrections here and there for certain stocks and especially for tech sector. And of course, there is a reason for that. Actually, there are a couple of those, right? COVID cases are going up again, there's a new variant coming up again, and who knows, maybe there's going to be another shutdown situation. Then inflation is through the roof, we've talked about that. And also unemployment still experiences some issues there. And on top of that, we start to see some supply chain disruptions. And all of these together add up to the whole this overinflated market situation. So why September? Because probably people thought it's enough, let's put some brakes on it. And investors actually started to put some brakes on the top Canadian stocks. For example, if you take a look at one of the biggest ETF in the technology sector on TSX, XIT, you can see it experienced a drop of around 15% in September and starting to recover slowly right now, but still it's under, right? And this is an ETF, so it has a lot of stocks in it, and it dipped around 15%. This is crazy, right? And there are some individual stocks that actually dipped around 40 or 50% in September, which is insane because what if you had those stocks in your portfolio and all of a sudden lose like 50% of it? This is something to consider whenever you start investing, and make sure you also have some allocation to ETFs where you are sort of protected from these different market fluctuations. And if you're like me, you're probably sometimes looking at these dips and thinking, what's gonna happen? Will this company actually recover and come back to its previous numbers? And I think there are a couple of those actually. I'm gonna go over two amazing stocks that potentially can double as soon as next year, which is crazy. You can actually double your investments with that, which is unseen. And if you missed out on Tesla, Amazon, Apple, Microsoft, Google, AMD, or any other stocks, this is your opportunity. And the first company is going to be Lightspeed POS. I talked about it before a little bit, but right now is the time when you actually need to start looking at it. The ticker symbol is LSPD. So right now the share price dropped significantly, around 56% since September. Why? Because you can actually pour your money into the stock and wait for its comeback. And they're gonna come back 100% because they're into e-commerce payments, and the e-commerce actually start to see another growth similar to what we've seen last year. Because e-commerce keeps growing, e-commerce is going to become the new normal, and it's going to be even more and more companies enabling it. Also, interesting enough that in the last 12 months, actually, Lightspeed gained around 300%. What actually happened to this company that all of a sudden, in the last 2 months, they lost 56% of its value? Not much. They showed a pretty good financial statements. They're doing pretty good. They're actually improving, increasing their profitability more and more right now. And more customers actually start to use Lightspeed POS because of it's a great service. And they actually started to acquire more companies as well. So they're improving and growing their business as well. And the major pain point for them was, as I talked about in the very beginning of this video, is supply chain issues. Yeah, that affected them 100%, but they cannot last for a long time. They're actually going to be recovered and fixed. So at that moment, when the stock is gonna start performing, start gaining its value again. And some analysts project that this correction for the stock price actually can still be there for a short-term period. But if you are investing for long-term, say 1, 2, 5 years, then right now is one of the best times to actually invest in this stock, because buying from the dip of 56% or 50% even, right? This is the best time to not only gain from a long-term performance, but also on the short-term dip. So that's what I'm doing. I'm still watching on this stock. I'm waiting for a slight increase in their share value and then all in. Well, not all in, maybe like 5% of my portfolio, something like that. But I'm definitely bullish on this company. Let's move on to the next one, which is gonna be Nuvei. I talked about them before, and this is insane how this company is doing right now. And Nuvei is actually one of the top fast-growing companies right now on TSX. And they showed actually very similar performance to Lightspeed POS. They actually lost around 35 to 40% since September, which is very concerning. But again, we know what's happening. Investors just putting their brakes on some tech stocks, and Nuvei is part of them. And prior to the fall, the company actually gained around 260% in the last 12 months. And Nuvei is actually one of the most popular tech stock on TSX. It's been like that for the last 2 years. They've been on every news article since, and they also expanded to US. They're traded on NASDAQ as well, which is a very popular move for tech stocks. We've seen that Shopify did it, Lightspeed POS also did that, and a bunch of others. And back to their financials, we've seen that they consistently beat the analyst projections both on their revenue and growth. And actually in Q3 of 2021, they showed almost 100% year-over-year growth, which is a great number for a company like this. And now it's on a 35% discount. What else you need to know whenever you make a decision what to invest in? And a lot of analysts projects right now that on the high end, by the end of next year, so in the next 12 months basically, the stock price actually can go almost to $200, which is what we want if we want to double our money. Because right now the share price is around $110, so it's been on a huge discount since September, so look at that. And if you are looking to invest in companies for a long-term period, then this company is a no-brainer. You just invest and forget for the next 5 years. They're gonna outperform the indexes most likely. I cannot predict the market, so I cannot tell that's what's gonna happen, but that's what the data tells me, right? So between these two companies, actually, I would consider you either invest into one of them, so you de-risk your portfolio, you're not putting all your money into two sort of speculative stocks and wait for them to come back very soon. So it depends on what your risk level is and how fast you want to get your money doubled and what you expect from your portfolio when you want to start pulling money out from your investments. That's a lot of questions to ask before you start putting your money into it. So check this out. I think it's worth at least adding them to your watch list and looking how they're gonna come back. Until then, all the best out there. Thanks you for stopping by. Cheers, stay safe, bye.